Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Monday, September 17, 2012. Well, a change of trend today and a candle with a lower high and a lower low. Previously we had a very strong first time frame uptrend that went for quite some time, approximately 2 weeks of trading. This area through here we had congestion and the market finding resistance around the 1440 level. But all through that period the trend didn't change, and it said something about the strength of the buyers in the market. For the previous day's trading to today, we had a small bodied candle with a longish shadow at the end of this strong uptrend. And that's a shooting star potential reversal pattern, and we have had confirmation of the change of trend today with the candle that's made a lower high and a lower low. For the previous day's trading, we had the small body at the top of this uptrend representing the buyers making a small amount of net bullish progress as opposed to the large amount they were making the previous trading. And today, with this change of trend, however, we've had a trading day where the sellers have attempted to take control of this market. They traded the market down below the low of the previous candle. They had enough commitment throughout the trading day to trade down through there, but they lost commitment throughout the trading day for the market to close up around the midpoint level, and they also lost control of this market. Now, having said that, however, the buyers have not taken control, so that's important. While the trend is down, the buyers have shown no strength in this market, but the sellers have lost strength throughout the trading day. Now, we do have a black candle, however, and that denotes the sellers making net bearish progress. So there was obviously some momentum to the downside for the sellers throughout the trading day. And this does set the market up for a potential change of trend. We do need to be aware of that. So we do need to watch the high of the current candle for a potential higher high and higher low. But because the buyers aren't showing any strength either, there is still potential for the market to continue trending down. Now, we don't have any major support until the market trades to the 1440 area, previous level of resistance, which now can hold a support. And we also have the Kijun and the Tenkan-sen trading just below that area, roughly around 1437, 1435. Now, in terms of the Fibonacci extension for the prior uptrend that the market was in, and we saw on for Friday's trading the market test just above the 423.6% level, and we saw this very strong rejection from that area. Candle where the sellers actually took control by the close of the trading day by closing down below the midpoint level, and that was significant and did lead to this change of trend to the downside. The market previously traded very strongly up through the 100%, 161.8, 261.8%. We had that very bullish breakout up above, and now the 423.6% was an area where the market found resistance, and that's really quite an extreme. You don't see markets trading up to these levels with the Fibonacci ratios very often, and it does mean an extreme market. And if we look at where the market is trading in relation to the cloud as well, it is at an extreme, and it's little wonder that the market is now attempting to retrace and trying to find some sort of equilibrium with regard to the Ichimoku indicators. In terms of the current Fibonacci extension, and we're examining now the first time frame downtrend and the relationship of that to the previous time the market was trending down, and it was only one candle downtrend prior, and the market has tested exactly to the 100% level here, and we've seen rejection from there, so that could be significant. There is a possibility of a change of trend back to the upside. If we do see the market trade down through that 100% level, then we have the 161.8% level at 1447 has potential to hold a support, and then down to the 1431 level at the 261.8% level. But in terms of the Fibonacci retracement of the prior downtrend, and here we see once again how important that 423.6% level was. The market closed right at there. It was rejected very strongly from above there, with the sellers taking control on the trading day, or closing with control on the trading day. And as I've mentioned once again, the 423.6 is an extreme level and a change of trend now for today's trading. And looking at the current Fibonacci retracement, we're looking at the relationship of the current downtrend the market is now in relationship to the prior first time frame uptrend. And here we've seen the market find support around the 23.6% level, which is a minor level, but it is significant because we have seen rejection from there. So there is potential for the market change trend for tomorrow's trading. But we do need to watch other significant levels, the 38.2% level around the 1444 level, which coincides roughly with that 1440 level of strong previous resistance and now support. and also around the 50% level, where we have a confluence of the Ichimoku indicators, the Kijun-sen and the Tenkan-sen, around this 1435 area roughly, and that's going to be a very, very strong level if this market does continue to come off. It also coincides roughly with an area just below the previous area of resistance, and where we had this congestion over the previous week or so. Now, in terms of Ichimoku, we have a bullish market in all three timeframes. The market's trading above the cloud, above the Kijun-sen, the pink line, and the Tenkan-sen, the green line here. So we're bullish in the long term, medium term, and fast term timeframes. The Chikou span is above the corresponding price action, so it's confirming this bullishness that we're seeing in this market. The Kijun-sen is pointing flat, and we do need to watch that. When the Kijun-sen turns flat, price action is attracted back towards there. So even though the sellers have lost commitment throughout the trading day and the buyers have failed to take control of this market and haven't shown any commitment, there is a possibility that we will see this market continue to test back towards this flat Kijun-sen. Now, obviously, the Fibonacci ratios that I've mentioned are the ones that we need to watch for potential support, but this area around the 1440 level is very, very strong. So, summarising, a trading day and a market where we have the buyers in control in the longer time frames. We have, however, the sellers attempting to take control for today's trading. They've lost commitment, but by the same token, the buyers have failed to take control in terms of the short-term dynamics. We do need to watch the low of the current candle for a potential continuation of the trend, but also watch the high for a potential change of trend back to the upside in the market to continue trading up and perhaps test to the 1523 level over the next week or two.